Alibaba. And I don't usually cover the Chinese stocks that aggressively, but I do cover Alibaba because it is a part of Berkshire Hathaway, which a lot of you guys may know I'm a big Berkshire Hathaway type of gal. So because when I thought about what shows to do today, because there's just so much going on during earnings season, anyone speaking today will be pure conjecture. And pure conjecture, I don't think is helpful to anyone per se. Let me actually show you a little bit of macro, and then I'll go through what's going on with Alibaba that makes it so interesting to me to talk about it today. Plus, it's Chinese New Year, so I thought I would do a Chinese stock. This is earnings week, and today you really have only a couple of people reporting earnings at all. It's like the world's smallest list of people. But then, even though this is what I'm looking at thus far, usually there's one or two, quite a lot of corrections, not just one or two. Ultimately, you'll see almost everybody reporting earnings. Microsoft reports tomorrow after the close. Tesla reports and IBM report on Wednesday. And by the time those three report, because Microsoft is such a huge component of the S&P 500 and literally every indices, you'll see any number of things happen and it'll be all bets are off. Additionally, the rails report this week, so we'll know what actually got delivered across the nation, so we can tell who in advance is lying a bit. So tomorrow's episode may be a little bit more directed, but Alibaba, regardless, is one that I'm intrigued with. And then I think, in fact, has a lot of little baby peculiarities that definitely people need to keep track of. I do think there are still opportunities in Alibaba, so I'll go ahead and give you that to start off with. But I am going to go and tell you what happened in September as a preview. And then because it's Chinese New Year's, I anticipate volatility in this stock. But I want you guys to take a look at it that way. Okay, so the earnings season this week is crazy. This list will get bigger. And by tomorrow evening, tomorrow is still kind of this weird day for earnings season. We'll know a lot about what's up for trading on Wednesday. The only little baby caveat to that is this company, Albemarle. And Albemarle, I watch very closely. What Albemarle does is that they create lithium, and about more than 50% of their operations is overseas. And they are really the one US pure play on lithium, but because of where they're located, they'll tell you what's going on in mostly China and Greater China region. So I watch them like a hawk when they come out, because they do give you a sense for what's going on with Tesla, because Tesla absolutely does buy lithium from Albemarle and other places, locations, etc. So that one actually does report first thing in the morning, and they usually have decent color. Although none of these companies, because of SEC, are incentivized to talk too much about their competitors or too much about their customers for obvious reasons. Okay, so that's the lay of the land. Now let's get into why I am talking about BABA today, and it's really because of Lunar New Year. So Lunar New Year always results in very strange news flow coming out of China. And I think it's because most of the Chinese, people that know China well go on vacation and try to go see their families. And you're left with very much so the B team at a lot of news organizations reporting on China. And what happens as a result is you get all kinds of crazy going on. Here are the things that you have to know about Lunar New Year. And strangely enough, some of them are now wrong in Google. Because when I went to go Google some stuff just to check, I was like, no, this is wrong. So first of all of East Asia celebrates Lunar New Year, but China celebrates the most days of Lunar New Year. And it really has to do with the history of East Asia. So for the first 3 days of Lunar New Year, everything is more or less closed in East and Southeast Asia. That includes all of the countries that then export that you would think aren't China, but are absolutely going to take those days off because their major customers are closed. So Vietnam, Korea absolutely celebrates Lunar New Year, so on and so forth. So just be aware of that. The celebration is a 14-day celebration. I have seen everything under the sun for how many days this thing is, but it's just to be really clear, it's called Lunar New Year because it is a celebration of the new moon into the full moon. So it will end on February the 14th, or sorry, February 5th. The full moon comes out on February 6th. So just in case you're seeing this wrong somewhere else, it is wrong. Okay. China is typically closed for a minimum that first week in general, but definitively the first 3 days. And the biggest thing to note about Chinese New Year's is that people tend to travel extensively. Meaning the whole point is to go home and see your family. And that actually has very specific meanings as well, because on different days, you're supposed to see different family members and friends. And so the thing that we came out with a while back on the CCP, post CCP, and China opening up. So if you'll recall, most of the weirdness that went on with China stocks last year, which we talked about, had to do with the things that were going on with Xi Jinping trying to become a permanent leader of China. That happened in October, but we said that we would anticipate some run up ahead of Chinese New Year's, but that because Chinese New Year was still a wild card as relates to travel, as relates to when he could truly fully open up China, we wanted anyone playing the options market to be farther back, or instead between the end of the CCP Congress and the new year for you to just own stock. Okay, so now we are in the first 3 weeks seeing that Chinese run up, and I anticipate that you will see more of it throughout next year, because as we talked about in that call, which I will post at the end of this, China, like now that all of those issues are over with, the most highest probability thing that Xi Jinping will try to do is open up the Chinese economy and try to ensure that his first year coming in is strong. And the reason that we are doubling down on that thought process is he really could have gotten more aggressive on the protests that happened. Instead, relative to other protests, and I know this is kind of not fun to talk about, but relative to other protests, it wasn't nearly as ugly as we've seen historically on how those Chinese protests have gone. So anyways, that is really the primary focus of why Alibaba right this minute over the next 2 weeks becomes an incredibly interesting company to look at. Now let's go through the actual financials of Alibaba. So the one thing to note is that, the other thing to note with Alibaba that I will go through at the very end is the risks associated with it, not the least of which is Amazon may not have quite the same positive vibe as Alibaba does, but they do sometimes trade in lockstep. So let's actually talk about what happened in September. Alibaba reported earnings, and they actually did pretty well. Revenue was down only 1% on China commerce, but the rest of Alibaba that still remains as a part of the main company ended up with up revenue of 3%. And then on net income, you ended up with a lot of oddities because of this one thing, which is interest and investment income net down 42, which brought the total number to 20, down 20, versus if you remove that, you'll see that it's up dramatically year over year, up 20 versus 5.3. Or actually you'll go here, you'll see it's like 5. So they always report in renminbi, so you got to translate to US dollars, which is this column over here, but it's 5 billion that they took as a hit on investment income. And if they would not have taken that hit, you'd have this ridiculous net income increase for the quarter. And so that is where Alibaba ended in September. It does not include the holiday season, which was strong, very strong for China in that regard. A little bit weaker for 11/11, but not relative to what had happened in 2021 when they were locked down. So lockdown, that's the situation. But the reason that it becomes very interesting is because it is 100% one of the cheapest valuations that you will get for a company that is doing just fine. We are seeing massive run-ups right now among all the large cap names for companies that are undervalued, severely undervalued. Alibaba will not report until later January, and I wanted to do this one because I anticipate over the next 2 weeks there will be volatility. But this is the valuation that you get. you get a valuation of about 2 times enterprise value to EBITDA. And you should note that this calculation is a little bit funky no matter where you look on the data streams. So this is just what the data stream calculates it as. If you were to go in and do your own calculation, you might get actually an even lower number. And it just has to do with the fact that EBITDA that's given by the company is around 146 billion. And then a lot of times they do not do a normal adjustment for debt. So actually they are in a net cash position, which is kind of important. And so you'll kind of want to, like, 2 times enterprise value EBITDA could actually be overstated in my opinion. Okay. And then the last things that I just want to talk about briefly. So anyways, it becomes the cheapest large cap company that you can find. And then major issues that you do need to be aware of is that the one thing, this is the list. Okay. So if we get continued global economic conflict that messes up a China reopening, that is obviously a risk for this stock. However, that has been a risk for this stock for the last 2 years. So you kind of want to gauge, are we more likely to have China help us foot some of this Europe bill or not? From a US perspective, if I've got European people and that offends you, my apologies. But China absolutely, I've said throughout the last 2 years, could help America foot the bill that is required to get Europe through this conflict that they have on their soil, namely by giving them certain types of products and also certain types of fuel, not the least of which is lithium and raw precious, like the really crazy metals that only they produce. The VIE structure is a real thing. If you can purchase the ordinaries, you should absolutely do it that way. If you cannot purchase the ordinaries, then I purchase the ADRs myself because I actually can't purchase the ordinaries. But the VIE structure always puts a little bit more risk relative to the ordinaries. Further lockdowns could be an issue, but over the last period, what we've seen is mostly COVID. Like just letting people catch COVID and seeing where the chips may fall. There's the Chinese New Year's volatility, which again ends in February. There's a couple of accounting differences sometimes on companies that report earnings. And then Amazon, which trades at 20 times enterprise value to EBITDA, reports on the 2nd of February. That can also create volatility in Alibaba, even though the two are very much so, like, if anything, Baba just doesn't have the same dynamics because Baba is not, gets most of its revenue from selling things internal to China. So any foreign purchases of stuff off of Taobao or any other thing they have is a big deal. Additionally, I do want to mention that the reason China reopening is such a big deal is this company, China is a logistics company. It is soon to be and continuously becoming one of the global largest logistic companies with 152 nations supported in 70 carriers. Okay, really interesting statistics, I'm sure. But the way that you want to think about it is this was China's investment to try to be able to get to about 50% of the world's population in 5 hours or less. So that's what China is. In case anyone's confused, and it has been going gangbusters as relates to growth since the last pieces of that were finished in Hong Kong. But it is, even last quarter, it grew at 36% despite China mostly being locked down. And with that, I will just take questions. There are more than a few. Okay, hold on a second. Go ahead, David. Do you have any questions? I can't hear you.
No, I do not.
Hey, David.
Technical levels are on our website, Gurula.app, for AMC and Tesla and Baba. I know you're fundamental. We're technical.
Yeah.
Okay.
Yeah, Baba, you're seeing at 140?
Right.
Yeah, I mean, easily for me, like at 2 times enterprise value to EBITDA, like realizing that it is cheap, period, right? A market multiple would be closer to 10, 12 times. So that's why it's not just potentially a little bit undervalued. If it doubled, it would still be considered massively undervalued at these levels. That is why I think it's important to have it on the radar screen. And yet, because of the VIE structure, because of that whole list of risks at the end, that is what is making it trade at depressed levels. It's certainly not anything related to the company otherwise. And those are very real risks, by the way. I mean, last year it looked really ugly. And even last year, I told you, like China, I could see them literally delisting almost anything and everything, except they would probably not delist Baba. And it just has to do with the politics in China and the politics specific to Baba. Now,
What
if
is the
you look at,
margin?
what's that?
What is the margin on Baba?
What do you mean the margin?
Profit margin.
The profit margin?
Mm-hmm.
Oh, I mean, have a look. Like, hold on.
Oh no, I missed it.
Oh, sorry. That's okay. Hold on. Let me share my screen. I'll just show it to you. Here's the income statement, right? So if you look at income from operations, it's 25. Sorry, let's do it in US dollars so you can see it better. Right? We're at 7 billion off of revenue of 58 billion. So operating income is 7 billion of the 58. So
Cool.
what is
Thanks.
that? Like eight.
And that's what China closed.
That's what China closed, and
Right.
no international going on. Yeah, and just remember, because the thing is, it's really weird because sometimes with these types of companies, it does have multiple businesses, right? So the businesses that it has include, here, let me go to this one. The businesses that it have is the commerce business, which is still the bulk of the business. It does have a cloud business, but unlike the cloud businesses in the US, you would never anticipate that to be the same type of thing. All right. There are people that want exposure to Chinese cloud because they're trying to do their thing in China, but it's never going to grow like Amazon's cloud business or something. It's really the jewel of that item really is the logistics and Sinal service business, which you can see growing at 21 and 36%. Those are cash cows for shareholders of Baba going forward.
Thank you. Got it.
Yeah, but yeah, you have a really, like, it's just a really incredible discount that the Chinese companies currently trade at to the US companies. And whatever you want to think about that is whatever you want to think about that. I know some people just don't want to invest in China in general. That's fine. But man, is there a discount? You know what I'm saying?
Well, it's the Amazon of China, right?
No. Amazon is the Alibaba of the US. That's actually how you have to think about it. No, I'm not joking, because almost everything like, for example, almost everything that Alibaba has implemented, Amazon then follows about 5 to 10 years later. So, for example, Alibaba, their primary way of selling things is no longer just having a website and you link through it or whatever. Most of the Alibaba sales are done via video. So the things that you're now seeing Etsy do, et cetera, those have all been implemented in China for almost like 5, 10 years at this point. And if you think about what's being done on payments, like Ant Financial is absolutely an Alibaba spin out. The logistics business, what Amazon is continuing to try to create, just within the Latin America US situation, that actually has been the last 5 years, then really starting to make Sinal not just some random investment, but a main part of the balance sheet, starting in 2020 into COVID. So like you can't, like the reason I study this company is the same reason that it ended up in Warren Buffett's portfolio. Some of the stuff they're doing is really unique, and probably something that will be seen in other places. And that just has to do with population density, the type of support that they're getting, the fact that they don't have the same data issues that we have in the US, et cetera. They can actually implement a lot faster. And they also don't have a concept of monopoly going on in China, for better or for
Now,
worse.
the middle class in China is 700 million people.
Yeah.
Okay.
But I do think that the actual story for Alibaba specifically, more than Tencent, more than everything else that's in the index, is global reopening. They are the most, out of all the Chinese companies, I mean, maybe someone else correct me if I'm wrong, but Baba is by far the most leveraged to a global reopening, both because of the international component that has languished over the last 2 years and also the China business.
Cool. Thanks.
The China business realized that the way that, if you ever look at a map of China, China is organized for manufacturing. Like they literally built all of the things that go for export more or less electronically. Either it's by the coast or it goes straight down. And the stuff that's farther in is not so is not a certain way, so to speak. Like there is actually a map that manufacturers have, or anyone that's interested in outsourcing it to Asia has, that shows you where all the factories are. And the China business reflects the end game for that, which is one airport in Hong Kong that's already built, that basically allows you to if you wanted to create a demo of something in Hong Kong, get the parts and manufacturing done in Guangzhou and other regions, have it go on a train, on a bullet train that gets it back to Hong Kong for testing, and then flown out 5 hours on a plane to anywhere that, like anywhere all the way west to Dubai. And that's why it says it captures about 50% of the population of the world in 5 hours. That's the whole logistics that is actually, of which China is the part that goes international. That's the deal.
Their same day delivery.
Yeah, so they could literally, if you had a manufacturing plant in Hong Kong, okay, but there's some funkiness going on. But if you had a plant in or if you had an agency in Hong Kong that was doing all of the specifications for it, if they were collaborating this way, they should be able to get you your product, if you're in that region that's serviced, within same day. Yeah, that's how they were thinking
Awesome.
about it.
Awesome.
Yeah. All right. Tomorrow is a very weird day. Yeah, Amazon Prime is never going to do much in China, though, unfortunately, for them. So I think Amazon really, if they're lucky, they'll be able to get a little bit better in India. But India, they have been trying to do for a long time and have failed. Oddly enough, Flipkart is the company that competed with Amazon. It got bought by Walmart, and I've been very unhappy, let's say it that way, with how that integration of Flipkart has been going into Walmart. I would have thought it would have done a lot better, and it's failed. And I think some of that has to do with without going into gross detail, with some here, wait, this was the comment, with some of the peculiarities of the Indian market, namely the language differences and infrastructure differences that they are still working through, that China has already worked through already. The infrastructure of China is actually significantly stronger than India, if not any country on the earth, given how they invested in the trains, the rail system, and the airways, airports, etc. So
Yeah,
that's
Hadouken said Amazon Prime in China is the Baba bullet.
yeah, it won't be because
But they're a lot closer to the most populous parts of the world than Amazon is.
What's that?
The populous parts of the world. I mean, they can cover India, Middle East, Europe, right?
Yeah, but they just haven't executed well on it. So, like for example, Flipkart is actually the incumbent. Flipkart. So in India, the actual dominant player is Flipkart, which is owned by Walmart now. Flipkart just did a better job of implementing infrastructure by a lot, and that had to do with the peculiarities of India, which Amazon just tried like they could, like crazy, and weren't able to overwhelm that.
What does Europe do?
Europe has a whole mixture of different smaller players right now, still working through it. So Amazon does have a shot in Europe. We'll see, but thus far, Europe is slightly like Amazon. I think if you were talking Asia, unfortunately, no, Amazon has not dominated. For sure, Alibaba beats them in almost every country in East and Southeast Asia. And then in Europe, actually, it competes directly with Taobao and other AliExpress. So that one's difficult to say. And India has its own set of like players there that I think are very strong, to be fair. And it's just a question of how it will do. It's a really good question, though, Hadouken. I think outside of China, it's a little bit more ambiguous which companies will ultimately take the lion's share of commerce. But in China, China will never let any foreign national country come in there and meaningfully take the lion's share of any business. I mean, I'm sincere about that, and that really is a real thing. All right, any other questions? Let's see if anyone else came in. All right. Cool. Happy Chinese New Year's, guys. 2 weeks of it. So hopefully everybody enjoys the holiday to the extent that I've got some Asian folks watching this.